And we like to say good morning to Dan Geltrude. We're just hours away from 2017, so I want to wish you a happy new year, first of all.
Thank you, King. Same to you.
And we are approaching that 2017 January 1st. It is December 31st. And we heard a lot during the presidential campaign about the tax plans for each candidate. Hillary said she was going to raise taxes. Trump said he was going to lower them. We have a president-elect Trump, so I guess the lower taxes part won out. Where is this all going as we approach January 20th and a new president?
Let's take a look, King, as to where we are right now. So the president-elect has a tax plan, the House of Representatives has a tax plan, and the Senate has a tax plan. So what happens in the process is there's negotiations. Now, we have Republicans in both houses of Congress, and we're going to have a Republican president. So for the most part, Donald Trump should get what he wants from a tax standpoint. Now, the new Treasury Secretary, or the nominee, Steve Mnuchin, he's talking about tax reform being a priority right out of the box. As a matter of fact, the first 90 days, he's talking about having the biggest overhaul in the tax code since Ronald Reagan in 1986. So let's just take a moment and talk about how this process actually works. How do we come up with tax code changes? The process starts in the House of Representatives with the House and Ways Committee. And with input from the new administration, they start to work on what they want to see in our tax code. Once it comes out of that committee, and that committee will have both Republicans and Democrats in it. And once it comes out of that committee, it goes to the House, and they do their negotiations, and ultimately the House will vote on that bill. Then it goes over to the Senate Finance Committee, and they mark up their version of the tax code with input again from the new administration, and then it goes to the Senate for a vote. So now you have a House bill and a Senate bill, and oftentimes they are not the same. So the president can't sign two different bills. So what you have now is you'll have negotiations between the House and the Senate until they can come up with a compromised version of the tax bill, which will go to the president then for signature. So again, I say Donald Trump should get most of what he wants, but there is a process, and that process is much more complicated than what I just laid out. But that's how it's going to work, and we'll see how they negotiate this all out.
And of course, this is the last day of the year. Is there still an opportunity for, I guess, the Obama administration to have any tax planning opportunities at this point, or is it pretty much a done deal? What's happening right now will go through 2016 and into 2017?
Well, I think when we have the new tax legislation, that will go back to January 1st, 2017. That's what the effective date will be, and there's no reason to think that it won't be that. But if we're talking about what tax planning that you can do, here we are at the last day of the year. What can you do? Well, here's a big one. Don't die before midnight. Now, why do I say that? Is because Donald Trump is talking about he's going to get rid of the estate tax, or commonly known as the death tax, in 2017. So if you can hold out for just a few more hours, you'll get the benefit of not having death taxes in 2017. Next, maximizing your contributions into your retirement plans. And if you think about it this way, the golden rule is always to defer your income to the greatest extent possible. In this particular case, we're talking about tax rates that are going to drop in 2017. So you really, really want to defer as much income as you possibly can. And the one way that individuals and business owners can do that is through, for example, 401k plans. So you definitely want to, on this last day of the year, get in the maximum amount of contributions that you possibly can. Another item, again, last day of the year, maximize your donations to charity. Again, tax rates are going to go down. Therefore, you get more benefit of making a deductible contribution while the rates are higher. So I guess we could say it feels good to be charitable. It feels even better when you get a tax deduction.
And sounds good. Donald Trump has been focused a lot on lowering corporate taxes. What is your viewpoint on why he would be doing that?
I don't think Donald Trump per se has some great love for corporations in the United States. Donald Trump's a pragmatist, and here's what this is about. He believes that lowering corporate tax rates is going to be tied directly to creating jobs. And right now we have one of the highest income tax rates in the world for corporations, which is at 35%. Trump is talking about that he wants to drop that down to 15%, which would make it one of the lowest. And on top of that, he wants to have a 10% repatriation tax, which would mean any of these corporations that have funds outside the United States, if they're willing to bring those back into the United States, he'll only tax them at 10%. So he's really trying to provide incentives for corporations to bring those dollars back home. But let's talk about the big picture, King, which I believe is the basics of Trumponomics. So he talks about lowering taxes for corporations. And what should that lead to? That should incentivize corporations to create American jobs. And if that step works and we're successful at creating jobs in America, we're going to be putting Americans to work at higher wages because we have a lot of people that are unemployed. So right now, they're collecting money from the government instead of paying in with a portion of their income in taxes. So if we end up putting people back to work, more people have money in their pocket, they have more money to spend, and then therefore that goes to the heart of the matter, which is the growth in the U.S. economy. And that is what I believe is Trump's real push to get these taxes lowered for corporations. And let's just take a look, too, King, in how the stock market is reacting. They're looking and saying Donald Trump is talking about lowering taxes. He's talking about lowering regulations. That is being viewed as very, very positive for corporate America, and the stock market is reacting accordingly. And I would also throw in one more thing. I don't think it's all about just financial. It's also related to a feeling of optimism in the economy that we haven't had for a very, very long time. Now, some may disagree, and time will tell whether this is real, but again, I say Trump is a pragmatist, and he looks at this and says, we got to get people back to work, and we got to get people feeling good about themselves, and how do we do that? And Trumponomics is saying we got to incentivize corporations with lower taxes, and we got to limit or get rid of regulations.
And, of course, the national debt, which shockingly was not discussed very much in the campaign, is at the, I guess, $20 trillion mark at this point. How is the Trump proposed tax plan going to impact the debt, and how deeply in debt, as we are as a nation, is going to affect everybody?
Again, King, another great point. Now, I have to tell you, this is an area, particularly being a CPA, that I'm quite concerned about. This is going to be a really, really big challenge for Donald Trump and how we deal with the national debt. And I'll explain why. Right out of the gate here, Donald Trump is talking about massive tax cuts. What is the impact of that going to be? Well, initially, it's going to dramatically reduce the amount of revenue coming into the federal government. So naturally, anybody could figure out if our revenue is going to be going down, our debt may very well be going up. Now, how are we going to offset that? Well, Trump is pushing that he's going to be able to offset that with economic growth. And even if he's right, let's just say that his plan works perfectly, it's going to take some time for that to trickle down to actually have the economy grow. So the only quick fix to the reduction in revenue is going to have to be a corresponding massive cut in spending. And that's an area that he really hasn't addressed. In fact, Trump has talked about that he's going to increase military spending, which we know is a lot of dollars. And he doesn't seem very eager to be cutting entitlements like Social Security. So I look at this in the big picture, King, and I'm saying right now the math is not adding up in order to cut down on the debt or even keep it under control. So we all know Trump wrote the book, The Art of the Comeback, but he's never faced a task as daunting as this one in the national debt. So we're going to have to wait and see how he approaches this.
And Dan, I'd like to thank you for a great 2016 and looking forward to 2017 every Saturday morning, 7:45 a.m. right here on WIBG, 1020 a.m., 101.3 FM on the internet, WIBG.com. Dan's website is Geltrude.com, or go to his YouTube channel and search Dan Geltrude. Dan, Happy New Year, and we look forward to 2017 with more of your segments, Dollars and Cents. Thank you so much.
Happy New Year, King. Thanks so much.